Student Loan Forgiveness and Repayment Challenges, a comprehensive look at 2025. In 2025, the U.S. student loan landscape has become a complex terrain for millions of borrowers, as changes in federal policy, administrative delays, and evolving repayment programs converge. The resumption of student loan forgiveness under income-based repayment (IBR) plans has brought hope for some, yet significant hurdles remain, leaving many borrowers uncertain about their financial future. Resuming forgiveness under income-based repayment. The Department of Education has recently restarted the processing of student loan forgiveness for borrowers enrolled in income-based repayment plans. According to multiple reports reviewed by Business Insider, borrowers who have met their payment thresholds received official emails stating, "You're eligible to have your student loans discharged." These notifications indicate that the department will work with loan servicers to process the relief over the coming months. This marks a significant development for the approximately 2 million borrowers currently enrolled in IBR plans, based on federal student aid data from the second quarter of 2025. IBR plans are designed to make student loan payments manageable by capping monthly obligations according to a borrower's income. Typically, these plans promise forgiveness of remaining debt after 20 or 25 years of consistent payments. However, the department had paused IBR relief since July 2025, citing a need to ensure that payment counts were accurate. The recent restart means that most borrowers should have their discharge processed within 2 weeks, although some cases may take longer, according to the emails sent by the Education Department. Borrowers wishing to decline the relief must contact their loan servicer by October 21st. The department notes that opting out may help avoid state tax liability, though borrowers who opt out are still required to continue making payments. This timing is particularly critical due to the expiration of a 2021 provision in the American Rescue Plan, which made student loan forgiveness tax-free. After January 1, 2026, borrowers who receive loan relief could be subject to substantial tax bills if forgiveness is processed later. The American Federation of Teachers, which represents members enrolled in IBR and Public Service Loan Forgiveness (PSLF) programs, filed a formal complaint in September 2025, urging the department to cancel loans for borrowers who have already met payment thresholds before the tax-free provision expires. This reflects a broader concern among educators and public servants that relief must be expedited to avoid creating additional financial burdens. Shifts in federal policy and the Trump administration's approach. While IBR processing resumes, broader changes in federal student loan policy are underway under the Trump administration. Reports from the Department of Education, including statements from James Bergeron, the acting head of federal student aid, indicate a shift away from forgiveness-focused initiatives. The administration has proposed eliminating existing income-driven repayment plans, replacing them with 2 less generous options designed to prioritize structured repayment over loan cancellation. Additionally, the department is expanding the Ombudsman's office to provide guidance to borrowers on repayment options rather than offering direct debt relief. This shift accompanies a resumption of collections on defaulted loans in May 2025, after a 5-year pause, signaling a renewed emphasis on repayment enforcement. According to Business Insider and Federal Student Aid Communications, the administration frames these actions as meaningful and necessary enhancements to the student loan system intended to serve both borrowers and taxpayers. Administrative delays and backlogs. While forgiveness is moving forward for some, the broader student loan system faces significant delays. Court records and reporting by CNBC reveal that over 1 million borrowers were in a backlog to enroll in income-driven repayment plans as of mid-September 2025. The backlog has been exacerbated by temporary federal government shutdowns, during which federal student aid staff were placed on unpaid leave, halting the processing of new applications and plan adjustments. According to Michelle Zampini, Associate Vice President of Federal Policy and Advocacy at the Institute for College Access and Success, even before the shutdown, borrowers were at a breaking point. Delays in processing applications leave borrowers facing unaffordable payments, growing interest, and uncertainty regarding progress toward loan forgiveness. Mark Kantrowitz, a higher education expert, emphasized that the inability to clear the backlog is disruptive to the lives of borrowers, noting that the pause affects not just repayment but also eligibility for forgiveness under IDR plans and PSLF. Many borrowers stuck in the backlog were attempting to switch from the Biden-era saving on a valuable education plan, which was struck down in February 2025. During the legal challenges, borrowers were placed in temporary save forbearance. However, interest has continued to accrue on these loans, and the inability to switch to another plan means that borrowers are unable to reduce their principal or progress toward forgiveness. What borrowers can do amid delays. Experts recommend that borrowers take a proactive stance despite the uncertainty. Kantrowitz advises saving funds that would otherwise go toward loan payments, so that when the Education Department finally processes IDR applications, borrowers have sufficient funds ready for their first bill. Carolina Rodriguez, Director of the Education Debt Consumer Assistance Program, stresses the importance of maintaining thorough records and monitoring any applications submitted during the delay. Administrative forbearances initially granted when applying for an IDR plan do count toward forgiveness timelines, even if active payments are paused, providing some partial relief. Still, borrowers remain in a waiting game, uncertain when they will see progress on repayment or forgiveness. Looking ahead, navigating a complicated system. The current landscape of student loan repayment in 2025 is defined by both opportunity and complexity. On one hand, millions of borrowers can finally access forgiveness under IBR, potentially freeing them from decades of debt. On the other hand, policy changes, administrative backlogs, and looming tax implications create uncertainty. Borrowers must navigate a system that is in flux. The Trump administration is pushing toward structured repayment and limited forgiveness, while delays in federal processing continue to prevent many from accessing the programs they need. To manage this environment, borrowers should focus on 4 key actions. Stay informed. Regularly check emails and official communications from the Department of Education and loan servicers. Confirm eligibility and application status to avoid missed opportunities. Evaluate options. Consider the implications of opting out of forgiveness, particularly with regard to state or federal taxes, before the October 21st deadline. Maintain financial readiness. Save for loan payments in anticipation of processing delays so that repayment obligations can be met without penalty. Keep detailed records. Document all applications, correspondence, and approvals to ensure a clear trail that can be referenced if issues arise. In conclusion, student loan borrowers in 2025 are navigating an era of both progress and challenge. As noted in reporting from Business Insider and CNBC, the resumption of IBR forgiveness is a critical step for many, but ongoing administrative hurdles, policy changes, and the expiration of tax-free forgiveness provisions underscore the need for vigilance, preparation, and patience. For borrowers, the next several months will be pivotal in determining whether they can secure debt relief or face continued financial pressure. By understanding the evolving policies, remaining proactive, and keeping detailed records, borrowers can maximize the chances of benefiting from the relief that is now back on the table, while preparing for the uncertainties that lie ahead.